Hey everyone, one of the most common questions we get on this channel is, I'm about to start my LLC, but how do I actually do it? Now this happens a lot because everybody thinks they need an LLC to start their business. But here's the thing, you don't always need an LLC to actually get started in the first place. In this video, I'm going to be going over the biggest mistakes people make when forming an LLC. Mistakes that if avoided could save you a ton of time and money. So without further ado, let's dive in. We'll start with the first mistake that you're making, which is thinking that you need an LLC to start a business. One of the biggest misconceptions out there is that you need to have an LLC in place to start your business. A lot of people think that as soon as they have a business idea, the first step is to form an LLC. But here's the truth. You don't necessarily need an LLC to start making money. Many businesses start without an LLC, especially if they're just testing an idea or if they're freelancing. If your business isn't making any revenue yet, there's no immediate rush to form an LLC. You can start operating as a sole proprietor or an independent contractor, which is the default business structure for anyone who starts working for themselves without creating a separate legal entity. You can still earn income, pay taxes, and deduct business expenses without going through the formalities of setting up an LLC. One of the things I always love to tell people is that, do you even know why you need an LLC in the first place? Oftentimes, unfortunately, they don't. The truth is, you don't need to set up an LLC right away and worry about the hassle of doing so. Setting up an LLC costs money, and there are ongoing compliance requirements that come with maintaining an LLC. So before anything, ask yourself, do you need that protection right now? If you're not bringing in that much income or you aren't sure that your business will succeed, you might want to hold off on making your LLC. One of the next questions I see really often is, when do you need an LLC? Now this might be the case for some people, but what if you need an LLC early on? If you're in an industry where liability risks are high, or if you're entering into contracts or partnerships that require legal protection, setting up an LLC might make sense sooner rather than later. However, many small business owners don't need an LLC until they start scaling and seeing consistent revenue. One of the next big mistakes that people oftentimes make is not understanding the costs that are involved. This is a huge one. LLCs aren't free, and people don't realize that until it's too late. There are formation fees, annual maintenance fees, and other costs that vary depending on the state that you're in. These fees can add up quickly and become a financial burden, especially if your business isn't generating a lot of revenue. For example, in California, there's an $800 minimum annual tax that every LLC must pay, regardless of how much or how little the business earns. That's not a small amount, especially for someone whose business isn't generating much revenue yet. If you're in a state like California and you're not making a lot of money, that $800 could be a big chunk out of your profits. And it's not just California. Every state has its own set of fees for forming and maintaining an LLC. In New York, there's a mandatory publication requirement that could cost several $100s. And states like Texas and Florida charge annual filing fees to keep your LLC active. If your business doesn't generate enough revenue, these fees can feel like unnecessary expenses. Also, don't forget about ongoing fees. Most states require LLCs to file annual reports or pay franchise taxes. These are extra costs that a lot of people forget about, and failing to file these reports on time can result in fines and penalties. If your business is just getting started, you might want to reconsider if now is the right time to set up your LLC, or if it can wait until you've gained more traction and income. Before jumping into forming an LLC, it's really ideal to research the state-specific costs that are associated with it. You can always form an LLC later when the business is more established and the costs make more sense for your bottom line. The next big mistake I see a lot of people make is not understanding the compliance requirements. When you set up an LLC, it's not a set it and forget it type of thing. There are a lot of compliance tasks that come with it, and missing those can cause significant issues. Many states require you to file an annual report, update business information regularly, and pay state taxes. Some states even have a biannual or quarterly compliance system that can catch new business owners completely off guard. Let's take annual filings as an example. Some states like Florida require you to submit an annual report every year with basic information about your company, such as the address and the name of your registered agent. If you forget to file this report, you could end up with penalties, or even worse, your LLC could potentially be dissolved. This would mean that your business basically no longer exists, and you'll have to go through the hassle and expense of reinstating it. It's easy to forget these things, especially if you're busy running the day-to-day operations of your business. Missing these deadlines could cost you time, money, and even your LLC status. Many states will impose fines for late filings, and reinstate a dissolved LLC often comes with additional fees. To avoid these compliance issues, it's a good idea to either set up reminders or use a service like IncFile or Northwestern Registered Agent, which can handle your LLC's compliance for you. These services notify you when it's time to file your annual reports and ensures that you stay compliant compliant with state laws. If you guys want to get started with either of those, make sure you use the links down in the description. The next big mistake I see a ton of people make is overestimating the liability protection. Many people form LLCs because they want limited liability protection that comes with it. The idea is that if your business gets sued, your personal assets like your house, car, or savings account are protected. And yes, that is true, but here's the one thing that most people don't consider. If you don't have any personal assets to protect, does the liability protection really even matter? Let's say you're just starting out, you don't own a house, or you don't have a significant savings account. If someone sues you personally, what are they going to come after? There's nothing there. You're basically what's known as being judgment proof. So forming an LLC just for liability protection might not make sense if you don't have a lot of assets to begin with. If you own a home or have savings or other personal property, you'll definitely want to protect these assets from business-related lawsuits. But if you're just starting out with very little at stake, you might want to think about whether this level of protection is right for you. You can always form an LLC later once you've built up some assets. That being said, the type of business that you're running also matters when considering liability protection. For example, if you're in a high-risk industry, such as construction or food services, where lawsuits are a lot more common, it might make more sense to form an LLC sooner to protect you from legal claims. However, if you're a freelancer or selling low-risk products like an ebook, you might not need protection until your business actually becomes bigger. The next big mistake I see tons of people making is ignoring tax implications. By default, LLCs are taxed as a pass-through entity, meaning that the business profits pass through your personal tax return. That means you'll pay income tax on those profits, and if you're actively involved in running the business, you'll also have to pay self-employment tax. For many business owners, this can add up quickly. Here's where people often go wrong. They form an LLC, start making money, and then realize that they're paying more in taxes than they expected. That's when you need to start thinking about electing an S Corp status for your LLC to save on employment taxes. By electing to be taxed as an S corporation, you can divide your income into two parts: salary and distributions. You'll only pay self-employment tax on the salary portion, while the distributions are subject to income tax but not self-employment tax. This can save you thousands of dollars each year if your business is profitable. But here's the catch. This is something that requires careful planning. If your business isn't making much money yet, the tax savings from an S Corp might not be worth the additional complexity, as well as the cost of running payroll, filing extra forms, and paying for accounting services. Before forming your LLC, I always recommend talking to a CPA or a tax professional. They can help you understand how forming an LLC will impact your taxes and whether you should elect to be taxed as an S corporation, specifically to save on self-employment tax. They can also help you plan for future tax elections when your business starts generating more income. The next big mistake that I see a ton of people make is choosing the wrong business structure. Many people rush into forming an LLC without considering if it's actually the right business structure for them. For some, an S corporation or even a C corporation might be a better option, especially depending on your business goals and your growth plans. For example, if you plan to scale your business, bring in investors, or raise capital, a C corporation might be more attractive for investors. C corporations offer flexibility for issuing shares and bringing in multiple shareholders, which is important for businesses looking to expand and eventually seek acquisition. On the other hand, if you're a single member LLC, you might want to elect S Corp status once your business starts turning a profit. An S corporation provides tax savings through self-employment tax benefits, but it still gives you the simplicity of a pass-through taxation entity. The unfortunate truth here is that there's no one-size-fits-all answer, and this is why it's important to do your research and weigh the pros and cons of each business structure. And the very last mistake that you could make is doing this all yourself without proper knowledge. Yes, you can absolutely form your LLC by yourself, but most people who do this make mistakes. I've had tons of friends and clients who decided to go the do-it-yourself route only to mess up on something critical, whether it's formation paperwork, missing a compliance deadline, or filing incorrectly with the state. The problem with forming an LLC on your own is that the process can be confusing, especially if it's your first time. You need to make sure that all of your formation documents are filled out correctly. Your registered agent information also needs to be accurate, and you need to make sure that you're filing with the right state agency. Missing any of these details could delay the formation of your LLC or result in penalties down the line. This is why I always recommend using a reputable LLC formation service. One of the best I personally like using is Tailor Brands. If you guys want to get started with Tailor Brands, I would highly recommend using the link down in the description. You can get an amazing discount in the process, plus get access to their amazing LLC formation services. If you guys have any questions about this, make sure to comment them down below. Hit the like button and subscribe so you never miss any of our future videos. Other than that though, I'll see you guys in the next one.